Vikas, good having you. Thanks so much for joining in.
Pleasure is mine.
We've been trying to do these interactions with special guests and try and get a sense from them as to how are they looking at the markets over the medium term. But can't start off the discussion without talking about the current picture right now. What's your sense on what are we doing in the markets currently and how are we poised for the next couple of quarters?
I think currently I'm quite positive on the market, from a medium-term perspective. Since you asked me that question, I think most of the uncertainties are behind. If you look at from a global perspective, from local perspective, to some extent noise will always be there. But I do believe that we are, I think, set for a good medium-term rally. For a simple reason, I think earnings have kind of bottomed out, and we are only looking some sort of green shoots and uptick coming through. Some of the efforts which have been made by the government in the past will start bearing their fruits now. So I think I do believe that while there is some amount of skepticism in the market, but a lot of things are sort of slowly moving on the ground, and they will start reflecting in the quarters to come, and hence market will start sort of acknowledging those changes. I think we have from a global commodity prices perspective, from interest rates perspective, from if global crisis, whether it is most of the events are behind us now. I think only we need to see, or we are waiting for an uptick in the earnings, in the corporate sector, which I think is, in my opinion, around the corner. So you will start seeing, and investors also are slowly taking note of it. So as things start progressing, you will start seeing markets settling down and doing well. So I'm quite positive on the markets from even in a short to medium term perspective. I don't see many risks at this point in time in the markets.
But what's the skepticism about? I mean, is it the apparent or obvious factors like earnings? Is it more domestic, or do you think it's going to be global because you still don't know when Fed is going to hike rates?
According to me, global is not a big worry. I think even if, Fed has anyway given a very fairly this kind of guidance. One rate cut over next rate hike, that's not going to impact, frankly speaking. So I don't think globally there are many points of worry at this point in time. Largely, most of the investors, and somehow maybe this has been created by a set of market experts that nothing is happening on the ground. Things can't change so quickly. And so I do believe that now things are beginning to change, and still some section of market is still fairly skeptic. You're seeing order books of the companies getting built. You are seeing companies busy tendering, participating in the tenders. Now all those things take time. So I do believe that now things are progressing, but still there are a lot of people who are not believing it. So and first part, as the operating leverage start kicking in, you will see margin expansion. You will see, and that will be coupled with the interest rates coming down. So all those things will start. And I'm saying, despite the fact that current parliament session there's a logjam, and there's a possibility that GST might not happen. So I don't think if GST happens, it's good. But even if GST doesn't happen, I don't think it's a showstopper. We have lived in this country with the same setup for like so many decades. So there are so many low-hanging fruits. If you kind of just get them going, still we are good in terms of, because we are one of the, according to me, sweet spot in the global markets. In terms of valuation, we are not expensive. In terms of return profile, our ROEs are far better than emerging market index. So, and that too at the bottom of the cycle. Now, how can you get that kind of setup? Yeah. So according to me, at 15-16% ROE, and I do believe that in time to come, markets will get surprised on the earnings.
Earnings as part of GDP is abysmally low, so they only have to go up. So let's talk about the next 5 years. According to you, India's GDP could go up from $2 trillion to $5 trillion in the next 5 years.
10 years.
10 years. 5 years it cannot happen.
No.
Okay. Which means you expect that the Indian GDP in next 8 to 10 years will grow in double digit?
Thereabout, I think around 8-9%. So, and if it doesn't, I do believe there's a good chance that it might happen. Let's look at what are the reasons for that. I think Indian economy can easily, is well poised to go to $5 trillion economy, and there are three big factors according to me. Our demographic setup, which is talked about a lot, but I think that demographic setup is a very important thing. India will contribute 25% of the incremental world workforce over the next 10 years, which is not a small amount, and that is a very big enabler. Second one, if you look at, is the proactive governance, and I do believe that this government has all right focus in terms of enabling this demographic dividend, which otherwise could become a liability to a positive advantage of the country, and that I think is and I can talk about what are the various things they are doing it. So I think, so if you have demographic setup well for you, a proactive government, and most importantly also a very nice global setup. Currently the entire global setup is very much in favor of India. It is commodity. You can look at commodity prices. You can look at fund flow situation. You can look at, I think, China. So India has lot of things going in its favor. if India cannot capitalize at this point in time, in my opinion, we will miss a big golden opportunity. And I do believe that I think our government understands that government is doing everything right in terms of moving forward in that direction. We can all look to find sort of fault that what they are not doing, and which I also can do that. But I think if I look at the big picture, macro picture, we are moving very well in that direction to capitalize this opportunity, in a right fashion. And also, it is very important. See, the question which you have to ask when you are looking at 10-year out, that how sustainable is this growth is. I mean, 2 years of 8-9% growth or double-digit growth makes no sense, right? I mean, then it is not really. So, what is required to have this kind of, in my opinion, this kind of sustainable growth for 10 years, and which, if you look at each and every program of government, you will see underpinning out there. In my opinion, three kind of balancing would be required, to achieve this kind of growth. Yeah. One, you will have to have investment-led growth versus consumption-led growth. And India is well poised that India needs big investment and India has a big consumption market. Yes. So, you will have very well balanced growth on investment versus consumption. Second big aspect of balancing which is required is that when India's size, economy of this size, you need to have very well good balance between manufacturing, agri and services, which I think again one more balancing required. And the third aspect, which is again very important, is domestic oriented versus export oriented. So, if you keep going balance of these three balancing over sort of 10 years, I have no doubt that we can do a double digit growth or 9% growth over 10 years.
Right. Okay. So, because we are paucity of time as well, we could go on discussing about this, but the markets want to know if indeed the GDP moves up to 5 trillion and the market cap to GDP ratio also moves up proportionately, we are going to go up. What themes will lead the market higher? What Edelweiss as a house or you personally, what are the themes that you're betting on, assuming that everything that you're saying does turn out to be true?
No, absolutely. I think before I get into theme, I think I also would like to highlight one important thing. Along with the GDP growth, I think one more important thing required is the productivity improvement. And I do believe that we have a lot of things going on right for productivity improvement. Over next 8-10 years, you will see significant improvement in the productivity through again government, through technological factor, through entrepreneurial activity which is going in this country. And I think that will, whenever there is a GDP growth coupled with productivity improvement, which means less inflation, this is a killer combination for serious wealth creation in the market. And if I were to see this whole sort of process, how we can sort of create wealth in the market, how investors should play, what are the themes one can play. I mean, there are a lot of themes. Since I said that there is going to be well balanced growth, there are a lot of things you could play, and this rally or this 10 years could be very widespread rally. But if we were to pinpoint 2 or 3 themes, I would believe that immediately one theme which comes to mind is the serious investment which is going to happen in infrastructure. India will invest between $150 to $200 billion in infrastructure over next 5 years. Railways, ports, power across various urban infrastructure, rural infrastructure. Now, how do you play that? I mean, there are 2 ways to play: asset owners and asset enablers. And I do believe in early part of the cycle, you have to look at asset enablers, not asset owners.
Just break that for our viewers. When you say asset enablers, just for the benefit of our retail viewers, companies which make roads,
which make
companies which will be creating these.
Yes, so EPC companies, or a little a step behind, like equipment manufacturing companies, welding providing companies, so service providing companies behind these EPC companies. So, there is a whole chain, right, to make that infrastructure get
That's the first thing you buy.
So, that is the first thing you buy, because that is where the operating leverage kicks in the first, that is where the growth comes first.
But how will these companies get orders? Because corporate India does not have a strong balance sheet to give them orders. Corporate India by and large is bust. PSU banks don't want to give money to some of the infra companies. So, for the service providers to do well, there has to be a need or demand for service.
There is. So, that is what I am saying. If you interact with all the EPC companies, everybody is right now busy tendering or participating in orders. And these are largely, so the initial part of the has to be started with the government. So, as you said, that railways right now, huge amount of preparation is happening for the order book, like Mr. Minister Suresh Prabhu has said also that they will spend over 8 lakh crores over next 5-7 years. Now, we know that when we interact with the corporates, that they are busy preparing for those big orders, they are busy preparing for metro orders, they are busy preparing for road orders. Now, all these things are lead indicators that the order book will start getting built up. And if you interact with companies like L&T and other you will see that sense of order book building is happening.
Don't give me that vibe.
No, if you look at profitability numbers or the revenue number, it might not, but if you look at the order book, you will sense that order book is getting built. So that's why I'm saying the lead indicator is order book, because what revenue today is what orders were ordered 3 years ago, 2 years, that was abysmal, right? So currently you might not see. So hence you have to look little bit farther and say if the order books are getting built, they will be executed, and early part of the order book, since there is a lot of work, slowly you start seeing margins getting driven by a operating leverage, and secondly the per se, since there is a lot of work, the competition tends to go down. So hence you will start seeing even margin expansion. So I do believe that, and we have seen similar situation happening if you see in 2004, 5, 6, when suddenly EPC companies which were nowhere started getting scale and margins expanded, and I have seen companies that time going 20x of the market cap in 4 or 5 years, because suddenly the work was so much. And I think currently we are coming out to a very significant skepticism cycle, and also in this cycle you will have companies which were kind of completely broken and companies which are not broken. So I challenge, I think you have to identify companies which are well good on balance sheet and then kind of play on them.
But L&T becomes a 5 to 10 year long story. In the near term, where do you see those green shoots where you think that earning is just on the cusp and we are now going to see numbers trickle in?
So earnings, I think again some of the EPC companies where balance sheets are in place. I think one of the company which we track in our this thing is Kumar Infra. It's a very it's focused on urban infra road.
But they had problems. They've had problems in 2007 and 8.
They've not had a problem, at least based on our research. They've been delivering quarterly earnings fairly. Never, I think so. At least we have not seen anything. And in last 3-4 quarters also, they've been building order book. They've been delivering numbers. So there are other companies. If you go to Sadbhav, they've been kind of doing well. In Nagarjuna, so all these EPC companies when you interact, which are reasonably,
So you like companies which are essentially making roads, which are service providers.
Yes, not only roads, I'm saying people who are doing EPC.
Okay. The reason why you like such businesses is because your underlying view is that economy will come back. I'm breaking it just for a viewers.
Absolutely.
If economy will come back, companies which will be enabling the infrastructure, they will make a comeback, and you are of the view that one should follow the pick and shove model, which is that rather than buying asset owners, buy asset enablers.
And the operating
leverage. Asset enablers.
Yes.
And will they get advantage because of operating leverage?
Absolutely. I mean, they are operating at 40, as you said, that at 40-50% capacity utilization. So there's no question that in fact the earning growth in the early part will be very high, because suddenly you will have 50% incremental capacity being utilized.
Revenue jump, and actually margins and earnings could jump up
faster.
as well.
5% up for the stock.
Yes.
Impact of Vikas Khemani.
Vikas Khemani.
It's
a combined actually, the right medium and the right person
I'm not
on that
recommending
medium.
so.
Okay, but the other one, because it's 10:08, so let's get to the other theme as well. And you believe that in the India story, what also fits in is the brand consciousness that comes in. So urban consumption probably a part of that. Why do you think that brand owners will actually go out and make serious money for shareholders?
Neeraj, I think if you look at over next 10 years, if the GDP goes from $2 trillion to $5 trillion, the per capita income will go from $1,500 to $3,500 approximately. Whenever this kind of change happens, in any country's life, prosperity level goes up for people, and whenever prosperity level goes up, people upgrade their consumption. They start becoming more brand conscious. And if you sort of look around you, people are using more of brand than they were using 10 years ago, whether it is rural area, urban area. And with the technological advent of internet and more accessibility and all the social media, the spreading of brand has become a lot more easier, and with the online models, reaching out to customers has become a lot more easier. So hence you will see brand consciousness amongst the Indian population spreading very fast, and also factors like GST and all will enable unorganized players to sort of become less competitive and organized players to become a lot more. So these are the 3-4 enablers which are available for branded plays. And if you look at in India of this size, we don't have fairly large brand oriented companies. Very few companies are there. So according to me, people who have established brands, they will sort of start getting supernormal growth or better growth.
But brands is a very large basket. I mean, from clothes to shoes to cars. Which segment do you think is going to
I would say probably it's this, like, let's say take for example apparels, footwear. So there are various, I mean, cars and all are fairly branded, so I don't think there are unbranded players in that. But in segments where people have been so far using unbranded stuff, and branded choices are available right now. So to that extent, it will. I don't think we ever thought of wearing branded garments 10 years ago. But today, everybody buys branded garments. Stitching is becoming out of sort of fashion. But if you look at with this trend, if you juxtapose the, let's say, largest garment or apparel company is only 5,000 crores, I mean, which is Madura Garments. Now, if you just put this thing together, you think that opportunity is huge, and companies are investing into this theme, companies are building that, and there are enabling factors. So if that would happen, look at, I mean, companies like Zara. I mean, if you look at global setup,
the second richest man in the world is the owner of Zara. That talks about the brand power.
Brand power.
It's not Warren Buffett now.
Yeah, and why it can't happen in India? I'm saying India has a market, India has, you know, sort of capability, and entrepreneurs are building that.
My only fear with this brand business is that e-commerce is destroying the margins.
No, but
e-commerce is destroying the basic setup.
No, e-commerce is not destroying the margins of the brand. In fact, in my opinion, e-commerce is enabling brand owners, because they can reach out to
destroying their margins. It's not like you're going to
they can reach out to, they don't have private label.
If your Arrow shirt is available online at the 30% discount, obviously the pricing power is not there with some of these companies.
No, see, I mean, while you can say that, I'm saying I don't think this discount can continue forever, but what I think helps is, you know, this is expanding big market. Like today, if I were to, earlier companies, if they were to reach somebody sitting in rural India or semi-urban area, they had to have a showroom and high cost setup. Today with online, they can practically access to billion plus people, every billion plus people. I think, you know, there's no limit to it. So I think while one side of what you are mentioning is correct, other side it has expanded the market. It has facilitated or accelerated the reach of the
that is true
brand owners. So
and,
I do believe that,
and so the Raymonds and everybody who's got a brand which is India specific would benefit.
Yes. And I think, see, so far in India, even in the FMCG space, you are largely dominated by the MNCs, right? So you will start seeing Indian companies, and we've already seen in last 10 years Godrej, Marico's, and slowly they have grown up. So Indian brands are getting prominence.
What about the price? I mean, some of these stocks, which companies which own brands, are called as defensives, and starting from a Nestle, even a United Spirits, I can throw in a Marico.
That shows the potential in that, you know, markets
but
are not stupid.
You know, price is what you pay, value is what you get. These are great businesses.
Absolutely.
But as of now, if I buy into a Nestle or a United Spirits, or for that matter, even a Page Industries, the P multiples are ridiculous.
Absolutely, and they are expensive. So I'm not saying that, you know, you just go and buy you know, every company which is available. They are expensive. So you got to look at, you know, where, like, let's say for that matter, if Madura Garments, you know, is available at reasonable valuation, they will be good. So there are companies which are, and why branded companies are trading expensive in the global markets? Because it's difficult to build brand.
Yeah, of course.
You know, so likewise, you know, what markets are right now factoring is accelerated growth. So let us say, if I were to compare this with an EPC company, EPC companies right now are trading only based on the current earning around 20 times PE, which is not justifiable. Why markets are paying 20 times PE for an EPC company, which otherwise not justifiable? Because markets are factoring in superlative growth in times to come. So similar kind of things
Apple is a brand company. I mean, the biggest company in the world is actually a brand, which is Apple. $700 billion.
And Apple is, according to me, luxury brand than really technology.
Yes, it's actually more of a marketing.
It's a luxury
play,
brand, you know. So,
but yeah, I mean, you know, just before we hit that break, I think the point out there is simply this: that for somebody, with due respect to this place that I'm speaking about, but a person in Gorakhpur could buy brands when he would fly to a Bombay or a Delhi or fly out of India. Now he gets it in his place, which I think is the power of the reach, really, and which is what probably works for these brands. Vikas, why this theme? Why do you like it?
See, one thing is very clear, that disruption in technological disruption is order of the day. It is happening in every, you know, aspect of our lives. Secondly, I think there is more of social media in everybody's life, right? So every company, every organization, every government organization has to change to this, adapt to this theme, locally as well as globally. And if you talk to companies, there's more of technology in every company's life. And the technological spend is going up in the new technological areas. Suddenly, earlier they were all application development, conventional software kind of, you know, spend was happening, but now every company has a serious budget, including ours, to kind of adapt to the new emerging, you know, technological advancements.
So your model portfolio has some weightage in persistent. Why does Edelweiss as a house like persistent?
So again, persistent is a company which is in the middle of SMAC space, and which is, I think, whole enabling these all technological disruption. So SMAC is an area where we expect spend of companies going up significantly, and Persistent's business model is right in the middle of that. They have a good product, they have good IPs, they have serious capabilities to cater to the enterprise customers, in that segment, and obviously apart from a great management team which they have built right from scratch. So if they built a company right from scratch and great management team in the middle of this, so that's the reason we are quite bullish.
Everybody is talking digital, starting from TCS to a Persistent to a KPIT, but within that SMAC space, which everybody seems to be acknowledging and mentioning, Why have you decided to choose Persistent?
So
what is so unique about their digital capability?
So as I said that, a Persistent, like if in TCS the SMAC is a very small part of the overall pie, right? But in case of Persistent, it is fairly large. Now, if you have a company which is largely aligned towards, one segment which we like, it's better to play that rather than playing through a large cap, company, because the delta of that in a smaller company will be fairly large. And they can grow very fast, they can change very fast, they can so cater to the customer in much more better manner.
Okay.
So that's the reason I think we've been bullish, and we've been bullish not from now, I think for last 2 years. And we seriously believe in the capability of the management. The final thought I can tell for you viewers that
your favorite quote, your book.
Equity as an investment, as an asset class, is very going to give significantly better return from risk reward perspective. Start investing into equities. I think next 5-10 years will create serious wealth. People who can be patient, and in my opinion, amongst all the asset class which is available, real estate, fixed income, equities, I do believe that equity will give serious compounded returns. Compounding is the least understood term in the world of finance. I think 15-20% compounding can create serious amount of wealth for investors. So I would strongly advise your viewers to kind of invest seriously into equities.
And be patient, right?
And
that's
be patient.
the key word,
Yeah,
considering.
But that's the
That
quote.
from
Yeah.
Albert Einstein. When the man who gave the world the famous formula, W is equal to MC square, he believes the power of compounding is the 8th wonder of the world.
He who understands it earns it, who doesn't pays it. That's
I like the latter part better. That hits you more. It stays with you.
Okay.
Well, it's power of compounding, the magical power of compounding.
Nice. Great, Vikas. So good having you. Thanks so much. We wish I had
Pleasure
time
is
for
mine.
more.
Thank you for
but
having me.
time up completely. Thanks so much for joining in this big picture today.
Thank you.